The Great Depression. It left a mark on the United States that will never be forgotten. Savers watched their money evaporate in bank failures, and scars were left on the psyche of investors who lost everything. Today, the recent financial crisis might pale in comparison, but millions of Americans have experienced significant losses in capital and are now more cautious with their investments.
Things were great through 2007. Then, of course, the wheels came off. We had a major financial crisis when the market declined 37%. Many major banks really suffered. That caused a lot of concern. People lost a lot of money. People lost confidence in the financial system.
Because every investment carries with it some degree of uncertainty, risk tolerance is now generally recognized as a prerequisite to developing a sound financial plan for every investor.
I think investors should think about their risk tolerance. As you march out on the risk curve, the more risk, the more potential return. So it's important to judge, where are you? How do you feel in your stomach? Especially if you encountered another 2008, which I don't expect, but you have to think about it.
During a recession, people tend to wonder what type of investments they should put their money into without having to worry about major declines in the market. To get an accurate picture of the risk associated with any individual investment or portfolio, the various forms of risk should be considered collectively. Experts agree that a diversified portfolio will have less volatility and steadier returns for the investor.
Many people think that they can stand a lot of risk until they lose a lot of their money. And I think it's very important to be diversified. I would never suggest having 1 or 2 or even 10 individual stocks or holdings in a portfolio.
When searching for a fund manager, investors like to see experience and a consistent record of returns. While observing the highest ethical and professional standards, Brown Capital Management has worked with a variety of investors, each retaining varying goals and objectives through separate account services and a family of mutual funds.
You will need in the order of $100,000 in order to have a diversified portfolio. If you have less than that, then I think the best option will be mutual funds, because with mutual funds you get immediate diversification.
Based in Baltimore, Maryland, Brown Capital Management has attracted investors with strategic long-term goals since 1983. Their personalized services and efforts to deliver consistent, long-term results have earned Brown Capital Management the trust and respect of investors worldwide when it comes to growing their assets over time.
Brown Capital Management is a pure investment management firm. We have no other businesses, no other diversions, no brokerage business, no investment banking business, strictly investment management services. Our mission or goal as a firm is to provide an attractive rate of return for our clients consistent with their risk tolerance.
The investment managers at Brown Capital Management possess the skills and rare insight that savvy clients require when selecting active portfolio management, and are dedicated to achieving the needs of each individual investor by offering a diverse mix of the right investment choices to meet each client's long-term objectives.
Everything we do, whether it's for our private clients or whether it's for our mutual funds, is under one investment style or philosophy, and that is called growth at a reasonable price. It means that we pay less and get more. And that's a great position to be in.
Whether you are an institutional plan that oversees billions of dollars, a wealthy individual or family, or like most, working hard to save intelligently for the future, Brown Capital Management may be able to help. Brown Capital Management, the right choice for smart investors. For more information, please visit browncapital.com.